Hello everyone, welcome to the KMT Traders channel. So this is the full market analysis volume 9. Just to give you a quick run through of exactly what we look for in this video. So we just look at all of the pairs that we currently watch on this market, and we'll go individually one by one, and we'll just look at the invalidation zones and the how to determine the bias, as well as looking at the key areas of the market, which is very crucial um, in each of the pairs, because of course you want to know exactly where you want to get in, where we're looking to buy and where we're looking to sell. And also we want to look at how we can understand the market from, are we looking to buy here or are we looking to sell? So we have to just determine the bias for each pair, which is obviously the most important thing, I believe, in trading. So before we actually get into this video, I just wanted to pay a quick attention to our private Telegram group chat. That link is in the description below, so I'm not going to bore you too much about it. It's just that we provide a bit more updates, a bit more exclusive information than just our videos and our Instagram. So if you're a new trader, I'd just definitely click that link and just check it out very quickly, and may potentially help you with your own trading. Okay. So the format of this of the structure of this video is, if you just look at the side here, we have one pair that we will discuss after this video. It's just a quick video. That's because we're actually looking to trade this pair. But all the ones in blue here, from gold to euro, Canadian dollar, that's the one that we're actually going to look at. So let's just start off with gold. And obviously, if you have been paying attention to the markets for the last end of the week, just been paying attention towards these wedge patterns that we've got here. So I mentioned this early on in the week, and in the previous, I believe, some of the videos that we've done on gold, if you want to go check that out. But yeah, we was just waiting for the push to the upside and a break. So what we have here is our red zone. Now this is our invalidation zone that we talked about. So once price obviously pushes down from this point here, so if price descends here below this point, we will be looking to sell the market. Okay, that's because the structure and the momentum has clearly reversed at this point, and we're looking to descend down. So this orange zone that we've got here is our form of support. Now if we hold this zone, we should be able to continuate this move to the upside. It just really depends upon market open, and again, if we are able to push lower than this zone here. So just to give you the range for the invalidation zone, so it's just 1730 to 1726. So again, just put this zone into your chart, and we're just looking for invalidation here. So just to give you a run through on the bias here and why we were looking for buys at this point. Well, if you look at the previous structure here, we have this huge momentum push to the upside here. Okay, so if we have all this pressure to the upside, typically what can happen now is price comes to an equilibrium point. So this is this pattern here. So this is the consolidation or range patterns that we look at, and we'll cover these sort of different patterns on our Instagram. So if you want to check those out. So we just recently covered a channel breakout. Excuse me. So a channel breakout will obviously look in further detail if we do come across one again. But this one is called a wedge pattern, and we'll probably do a post about this in a bit more detail. But for those that are watching right now, we'll just quickly run through it. So what happens is price pushes up in a continuous trend. So as you can see here, we're making our structure highs and we're making our structure lows. We're pushing all the way high, and obviously price cannot just keep pushing up and pushing up. So all this, if you look at this in a form of energy, prices pushed from almost 1570 to all the way to 1740. So this is a huge push to the upside, and obviously we need to have a breaking point. So people who have bought from this point have either taken their profits at this point here because they believe that the market is overextended and it needs to again push further down in order for this to make another decision. So now, what typically happens on all time frames as well, not just the 4 hour. This can occur on all time frames, whatever you look at, really, whatever your preference is. But what happens is price just tends to jump up and down in a ranging motion, and this is where the price of fair price comes into play, where we can't actually decide exactly is price going is if gold is actually worthy of 1700, or are we looking to descend lower. So this is where the battle of the bears come in and the bulls come in. So if you look at this range that we've drawn here, the mark, you can actually mark this out. And of course, this is hindsight play, because you won't exactly know, because you're seeing price, from, say, you at this point here, you wouldn't exactly know that this is a range of market. So this is why you have to pay attention and understand market cycles. Okay, so price obviously pushes up and then it reverses, and this is just a period of time where market is just making its final conclusion, is if we're going to push higher or if we're going to push lower. Okay, so just a quick rant on a wedge pattern and why it happens. So I hope that kind of makes sense. But essentially what we're looking for is we can either do two things here. We can trade between the ranges here, or we can wait for that breakout. Now, waiting for that breakout is normally the best ideal point to get in on a trade. So right now gold is looking at a very good opportunity to potentially push up, but it really depends if we can hold this momentum. So again, false breakouts do occur in this pattern at all time frames. So a likely possible scenario is if we do break this red violation zone, we could actually be potential to push back into our wedge pattern. So just keep that in mind for future analysis for your gold, but of course we will provide that extra detailed video for you. But this is for again, this is more of a futuristic presumption. If we do get this push to the downside, again, this is not going to happen in this week, but potential if it is to break down. But of course we'll provide that video in different ways as we can. So again, that's just to summarize gold. Again, the bias of the upside, what we're looking for, and the key areas to watch. So moving on now to New Zealand dollar to the US dollar. So this is just a bit more simple here. As we can see, we will just draw our trend line. So we're currently trending towards the downside. So this is our bias. As you can see, we're just connecting two simple dots. This is how we connect, formulate the trend. Then the second step is how do we look at the entry point. So we're just looking at zones, remember. So this red zone here is our invalidation zone. So if price is to push against this point, we will be looking to buy. So our invalidation zone is between 0.60 to 0.599. Again, this is if price is to reverse, but if we pay attention to our key area here in our orange zone, we are coming to a price of previous rejection. So as you can see previously, price has been respecting this, and we have a form of price here where if you look at previous history, price has not been able to close here. So if we look at exactly how prices come to at this current time and moment, so the last close of Friday, we're actually starting to descend down now. So this is now a big part of the market in this pair, is either are we going to push lower, if we're going to possibly come back for a potential retest to test a higher zone and come down, or are we going to again push all the way back up. So again, it really just depends on the market update, the market open. Again, this video is just to give you all possible scenarios, so that when it comes to actually the market open, you kind of know exactly what you're doing. So again, this isn't what to trade. This is just to give you the possible scenarios of what is to come, so that you can understand the market perspective. The videos that we put out that are roughly around 2 to 3 minutes, they're the ones if you want to just understand the market at that current moment and that time, then they're perfect for you. If you're just looking for understanding of the market, this video is probably ideal for you. So again, moving on for the next pair, so looking at euro to the US dollar. Again, we're currently in some form of a range, but obviously on a lower time frame. So if we just simply just draw our current trend, and this is obviously we've just got a big pressure to the downside. We're currently stuck in between this red zone and the orange zone here. So a simple form of a range pattern here. We got the we have simple rejection here. 1, 2, 3. 3 confirmations of rejections, even 4 here actually as a very minuscule retest here if we just quickly zoom in. But as you can see, there is sensitivity in this area, so again, we'll just have to see if we can close above here, and if we do have that, then again that pullback at that phase we'll be looking for. So this is the invalidation zone. So if price pushes above this zone, we will be looking to buy, but for the current bias we are looking to sell. Now this area here in the orange is our key area to look at. So this is where we are paying specific attention to. As we can see, we've had previous price come into this area 3 times now, and again, this is why price is respecting this market so strongly. So we could have that bias and we could have that momentum to the upside as we're currently stepping up on a lower time frame, but it really just depends how market breaks out. So what are you looking to do with this pair? Well, you can do one or two things. Again, just wait for that breakout to the upside here, or you can conservatively play it smart and wait for that breakout to this point here. So again, there are 2 options that we can look at, 2 different scenarios. Again, looking at the buy and looking at the sell. Again, more clarity will actually come if you actually stay patient with this pair, and that's purely because we're just in a bit of a confusion state here, just in a slight choppy range market here. We want to be looking for markets such as these types of conditions where they're just simple, nice and easy, nothing complex like this. We just want to wait for this to happen. So how do we know when this is going to happen? So typically when these ranging markets occur, we then wait for that breakout, and this happens on all time frames regardless of what you're comfortable with. Of course, the higher the time frame you go, the more patience is required. The lower the time frame, the more opportunities you can obviously access to and trade to. So again, we're just waiting for the breakout for this pair. So again, we have the upside potential here and the selling bias here. So hope that makes sense. Euro New Zealand dollar, we're actually looking to cover that video afterwards. So obviously just watch out for that video. So we are looking to actually trade that this week. Aussie dollar to the US dollar. So this is a very interesting one again. We're actually looking to again switch, wait for the market to actually decide if we're actually going to push higher or push lower from our zones here. So again, we're looking for the push above here if possible. This would be a scenario. Again, this is the scenario if we're looking to buy, and then we'll simply just wait for that retest of a zone before we find the push. But as price is currently descending down on a lower time frame, we could have that potential of breaking our lower zone. So I will actually pay attention towards this throughout the week. We're more likely to push down this zone here, obviously because of where price is right now. That's just not. It's just a simple conclusion. There's no complication around it. Simply, my reason is because price is obviously just closer towards the zone, so we're more likely again to push lower at this zone, and we'll just simply just wait for that retest and again that push to the downside. So it's just waiting for again that setup to come, not pushing, not pushing in with these trades, not forcing a trade. This is where, most traders lose out on their capital, just rushing the process, that process really, and not sticking to the plan. And this is obviously where people tend to fail in this industry, and this is why we pay so much attention on patience and again patterns and waiting for that first confirmation. So again, I hope this clears things up very slowly. So again, Aussie dollar to the US dollar, we're just simply waiting for this push to the downside. So we're looking at 0.63955 to 0.63808. So if you want to put that into your charts, excuse me, sorry about that. If you want to put that into your charts, you just want to be paying attention at this zone. So one reason why we're looking at this zone is because if we look at previous price, we've been looking at one rejection here and the second rejection here, the third rejection here, and also a form of indecision here. So or also one here as well. So again, this is a valid structure to look at. So again, this is why we are paying attention to this zone here. Okay, so I hope that makes sense why we're looking at this precise moment to get in a possible entry for a sell. But again, if price pushes above our zone here, we will be looking for buys. So moving on to the next pair, US dollar to the Japanese yen. So current momentum is towards the upside. So how do we know this? Okay, so we've got the breakout of our higher time frame trend line. Okay, so this is the downwards momentum. Excuse me. We have the strong push to the upside, a nice chop, a nice pullback, not exactly too strong, as we can see if we look at the intricacy and the details here. If we now zoom in, and I talk about this a lot on the channel, and this is a very good textbook example of what a pullback looks like on a higher time frame. So if you pay attention towards the sentiment of the candlestick, so what I mean by that is just the length of the bodies and the wicks. If you start to look at that, pay attention towards the price action and seeing vigilantly what this is telling you. So if you can see here, this is a very small body here with a huge wick. This is indicating that again there's a huge rejection somewhere in this market and at this level. Okay, so what we can potentially conclude is that we could be looking at some form of rejection in this area, and that we are looking to push higher up. So this is step one in confirmation that we are potentially pushing higher. Okay, so if you were to scope down on the lower time frame, you would be able to see that momentum is slowly breaking this miniature downtrend, and now we're pushing up. Okay, so now how does this get into our trade? So we can look at a lower time frame zone, get in on an entry here, push to the upside. So we have a 4-hour rejection, entry at this point, SL at that point, for example. Of course, you can dissect this any way you want, but again, it just really depends on your structure and your time frame. So because we look at the 4-hour time frame and we're not aggressive traders, we're swing traders, which is again a lot of patience is required, but there is an expectancy to get some good reward. We just have to wait for price to punch out of our zone. So the key interesting zone that we're looking at is this orange one here. Now the reason for this again is we have 1, 2, 3, 4, 5, 6, 7 form of rejections. So can you see how exactly important this area of the market is? A very respectable zone to look out for. Okay, so you could conclude from this area of rejection just simply by how price has previously got to this point and just not been able to push higher or lower from this point, that if price is to come to this point here, we could either be looking at a potential sell. Okay, So if we were to do that, we could actually get in on an aggressive sell at this range here. But if price is to strongly close above, then we know that price is then looking for a push to the upside. So therefore we would switch our bias and we would be looking for buys. So again, that's just obviously intuition. It's nothing complicated here. I'm just trying to really simplify what to look for here. It's nothing complicated with all these indicators. Just really straightforward progression of the market, understanding the market cycles as we talked about earlier. We're just looking for the breakouts, waiting for that perfect opportunity to occur. And again, if you miss out, you miss out. It's not a problem. You can always look at more opportunities. Again, it just really depends on your own time frame and your own responsibilities with your own, trading career, etc. Excuse me. So again, what I want to show you is our invalidation zone. So this is at a monthly level as well at 106.238. So this red zone here is just a series of again, the area that we're actually looking for is just if prices to come down way below this point, we will then be looking for that rejection, and then we'll see if we can get in of a retest at this point for a sell. So if prices to come way below this point, we will be looking for that selling opportunity. Okay, so again, we're looking at two safe options here for a buy and a sell. So I hope that makes sense. Not exaggerating, at this point here, we're looking for a buy. Again, this is a swing trading opportunity. So obviously look at the wider perspective and don't focus so much on the intricacies, because there's so much noise involved when you go on a lower time frame. That's why looking at a 4-hour, a daily, weekly is more than enough. So you just want to keep that into perspective. Again for this pair. So hope that makes sense, and again we'll move on. So looking now at the Canadian dollar to the Japanese yen. So again, if you've been looking at our previous analysis videos, we've just been looking at the range, and we've just been stuck into this market for a few months now, for a few weeks now. So if you look exactly here, two ranges here, we're just simply looking for that breakout to either side. So if we get a break to the bottom side, wait for that pullback, and then that descend to the downside. That's all we're looking for, guys. That's all we're looking for. Again, here on the upside, we're just waiting for that push, then the pullback, and then that push again. That's all we're looking for. No complexity is required here. There's no there's no need for all these complicated theories, the wave what's it called, the Gartley pattern, the the inverted bat pattern. These are all again, it's all personal preference. There's no particular right way of doing it. I just believe in clear structure of the market and repeating those patterns, vigilantly looking at them, and not taking the opportunities, aggressively. You want to wait for that particular confirmation first before you wait for that retest, and then you look at that opportunity to get in. Okay, so this is just one example of a ranging market, and I believe we have a few pairs that are still stuck in this still stuck in this range. Okay, now looking at euro to the Japanese yen. Again, this is just more of a smaller time frame within a smaller time frame trend. Okay, so I'm going to actually dissect this just for those, as we just had one question about this pair, and it's quite an interesting one just to learn from. So the euro to the obviously the Japanese yen, we just had this huge push to the downside. Okay, so we have this small time frame that we look at. If you were to imagine this on a small time frame, okay, any time frame just lower than a 4-hour or a daily time frame is good enough. Okay, so we just have that huge push to the downside. We then have that huge retracement, okay? But the thing is we're looking at the structure here. So if you were to draw where this structure ended, and it was roughly around this point here. So structurally, we are still in a downtrend, okay? So the next momentum is the push to the downside. Now looking at the retracement, if we look at where it's coming to the end of rejection, is at this point here. So what is the next potential step? Well, you know, we're looking at this area here. We're looking at this area here. Okay, we're looking to see if price is able to push further down and again not push higher. So again, we talk about what rejection candles are. So this here is an example of a rejection. This here is an example of rejection. This here is an example of rejection. This here is an example of rejection. So they're not exactly, it's not exactly waiting for that push to the upside. So an example is just waiting for one rejection candle and then observing that momentum. Okay, so you're just waiting for the rejection candle and then waiting for the momentum to continue it. This actually confirms that, you know, we are looking to reject this area. We're then looking to push lower, and then we're looking to, you know, look for them selling opportunities. Okay, so this is of course a lot of work that actually needs to be done, but again, this is your personal preference, and again, what we are looking for, and you know, this is something that we look out for with momentum trading, and in particular with swing trading, is we're just looking for that push to the downside here, waiting for that pullback, waiting for that rejection, and then that momentum to the downside. Okay, once that happens, we could be expecting, you know, that long potential run again to start a new trend. Okay, and the same thing that goes to the upside. If we get that closure to the upside, wait for that pullback, the form of indecision, and then that momentum to the upside. So again, it's just putting all the confluences together on all the time frames, and you can actually manipulate the market in any direction. You just have to be open towards your bias. Okay, so again, I hope that makes sense in terms of, you know, areas to look out for, and you know, structurally looking at the bias and what zones to pay attention to. Okay, so we're now looking at the next pair, so New Zealand dollar to the Japanese yen. So I believe that this is the exact same thing as the Canadian dollar to the Japanese yen. Yep. So what we are again looking for again here is we're just looking at the same thing. Simple breakout strategy. We're not paying attention of the noise inside. We're just waiting for that push to the upside. So again, this is just a similar thing as the Canadian dollar to Japanese yen. We're not pushing this aggressively. We just have to look at the waiting for that momentum to push to the upside or to the downside. Again, as you can see, there's so much noise in between. There's no actual trending market here. So that's the key thing about trending and trading. You want to get in on the actual trending markets as opposed towards the, you know, the range. Okay, so looking at the Aussie dollar to the Japanese yen, we have a nice push to the upside here. Now what we can see here, if we just extend our trend line, and I want to show you something quite simple here. So as you can see here, we've just updated our trend line. Now why did I actually push that? Well, we've made new highs and made new lows, and we just updated that, you know, we've got a form of indecision from this area. Okay, so how do I know that? Well, you're looking at this area of rejection just purely based on that sentiment of the candle. And again, we spoke about this earlier, but if you actually look here, look at that wick rejection. If you see that stick is actually really big in comparison towards that rectangular body. Okay, so this is a form of rejection, and take note of exactly where this has occurred. So this has occurred at where the high. So you could actually say in theory that this level is now respected. Okay, so this level here is respecting. So what we now look for is potential signs of rejection from this level if we get that retest. So we had that retest here. We found one rejection here, two rejections here, three rejections here. So in theory, you could have actually took a selling opportunity within this range at any point of this level. Why? Because you've found a level in the market where we found previous rejection. We waited for market to come back to this point. We've waited for momentum to again exhaust. We've got all this selling pressure here, huge selling pressure. And take note of this candle here. Can you see how much there is of bullish momentum to the upside, which then got converted and pushed aggressively towards the downside? So you can just visually see this, okay? And this is what I mean by taking your time and understanding the sentiment of the market, looking at that rejection, not playing aggressive. This is not exactly the a market to again push aggressively. Of course, the Forex market is all about pattern recognition, all understanding about structure, and not just overcomplicating the process. As you can see, there is, you can lose a lot of money in this field. You just have to understand that, if you were to trade all the best possibilities, you will actually become profitable in the long run. But it's just understanding where the possibilities and the best ones occur, because that's understanding, the higher probability trades as opposed to the lower probability trades, which is not what you want to be taking. Okay, guys, so you just have to put the puzzle together, pick where price action is coming together. Don't overcomplicate the process, guys. Just stay focused with patience, and stay focused on, if you feel like you're over trading, you feel like you're pushing aggressive, just understand that you do have more opportunities to come. And again, if you do have troubles with that, we can obviously work. You can work personally with me or work beside you, and we can help you, switch your mindset really, and just follow our strategy. And it's just a very simple process to take. Okay, so the next step here is to again see if we can look at structure. And now we've got that momentum to the downside. We're now making lows, and we're now making again lower lows. So the momentum right now is, in my opinion, towards the downside. Now, if price is able to close above this zone here, we will be looking for that pullback and that push, and we will be looking for that buying momentum. Okay, so we will be looking to buy, but for now, we will be looking for that push to the downside, that pullback, and then that push to the downside. So you just want to take it slow. You don't want to play aggressive. Again, it just really depends on your preference. Okay, nothing above, nothing else, just your own preference. Okay, guys. So I think that's about it for this pair. So coming to the last two pairs now. I hope this has been insightful for those that have managed to stay all the way through. Again, if you do have any of the questions, I'm more than happy to help. Just message us through any platform really. So coming to this pair of what's it called, US dollar to the Swiss franc. So if I take your attention towards a higher time frame, I know we've got all this work here, but if we just look at what we can visually see, so we can see that sorry, we've got this huge push to the upside, form of rejection at this level, a descend to the downside. We've broken our uptrend here, so now we're looking for a ranging motion. Okay, so this range is between this level right here and the low point, so there could be any point at this point here, but we can actually scope a little bit lower, and this is where the use of lower time frames can actually help. So this time frame structure, this structure that we've actually broken out of, is on a higher time frame, such as a week and a daily. So because we look on a 4-hour, we can now depict this in a more ordinary fashion. So we can look at this in a more lower perspective. Okay, so what I mean by this is, if we look at the zones that we've drawn, we can now start to draw, lower time frames within time frames. Sorry, apologies. So what I mean was, we can now draw trend lines within a lower time frame. So we have this frame, this uptrend here, structure broken, tested towards the downside. We now have this huge push to the downside, rejection. Now we had that momentum to the upside again, once more. We had this level rejected twice, sorry, 3 times now. So 1, 2, 3. As you can see here, nice and easy, no overcomplicated here. So this is why we have our range to consider of potential selling bias at this point. Okay, so you can see here we have 3 previous rejections, and now if price is to return at this position here, we can simply just wait and observe price. This is all we're doing, guys. We're just observing and waiting for that particular point to strike. And again, if we find that price pushes extremely strongly above this, we then have to wait for that pullback and then observe again, wait for that indecision, and then we just execute on that momentum. That's all it is. That's all we're looking for. So now, if price is currently failing to push above this level, and we continue to make new lows, potentially look at making a new lower high. If we are able to make a new low and push below this zone here, we can actually wait for that pullback and look at that indecision before we make a push lower. And we will be looking at this low here. Now this low is on the higher time frame, and again we'll obviously pay more specific attention toward this, but again this is a very futuristic, forward thinking. Again, this is all what trading is, I guess, analysis wise, but because this is because this zone is speculated on a higher time frame, it's of course going to take more time to actually develop price to get into that region. Okay, so I hope that makes sense, and it gives you just a variety of what time frames can do, in terms of, you can scope on a higher time frame and it can actually mean you're in a higher structure, or you could be in a wedge structure, or you could be in a trending structure. You just have to, again, put the puzzle together, piece it together one by one, and understand that market really. So I hope I helped, understand this pair, and now we'll move on to the final pair and wrap up this video. So I know it's coming to quite a long video, but I just really wanted to again put more emphasis on our analysis. Sorry, the full market analysis. Put a bit more help in here. So hopefully this does help you guys. Okay, so coming to the euro to the Canadian dollar. Now let's have a look at this on on a wider perspective before. So what we can see here is, we've broken our huge uptrend here. So visually you can see this, right? Nothing complicated here. Price pushed aggressively to the upside. We broke down, pushed to the upside. Structure level rejected. Again, momentum to the downside, and now we're stuck in a formulation of 2 zone levels here. Okay, so simply just looking at visually, now we can scope down to a lower time frame. So if we just get rid of the drawings, we can just look at this on a more intricate detail, right? So of course this was all previously done on a higher time frame. So now that we understand that the market, we're in a ranging motion market, we need to understand now how to actually execute in this market. So looking at this pair on a lower time frame in terms of trend, so we have that huge push to the downside, we have that formulation of potential rejection, the double top. So now we are looking at this area here. So this would be on a lower time frame speculation if you would like to trade on between these two ranges. But for the time being, we've got this momentum here. So potentially we just have to wait to see if momentum is pushing up or down. So that comes with, again, waiting for that momentum, waiting for key signs of rejection. But do you know where exactly the better opportunity to trade? And this is actually the zones that we've drawn here. And I'll tell you why. It's because we've got one rejection here, two rejection here, three, four key rejections on either side. So this is a higher time frame detailed range in market that we look at here. So we're not speculating this on an intricate detail, which is all of this here. We're looking this at just a bit more of a higher time frame as opposed to a lower. And again, the more safer opportunity is just waiting for that push to the upside, waiting for that pullback, and again waiting for that push to the upside. And again, if we're looking at the downside, we're waiting for that lower push, we're waiting for that pullback, and we're waiting for that momentum. And obviously the key thing to look at is just that area of rejection here, just to show that market is again rejecting this area of support or resistance, and we're pushing lower. So again, this is all the ideas that runs through my mind when I'm looking at these markets, and I tried to show you throughout all of the pairs, looking at how you can get in on a lower time frame, as I know most people don't really trade on a daily and a 4-hour time frame, but again, you can actually take multiple trading opportunities on each time frame. You just have to understand, that our method can actually be used on all time frames. You just have to understand it correctly so that you can then apply it. So we actually do help people with our method. We actually do teach this method, and again, we do this in our premium group chat. So that link is in the description below. If you would like to join that, I'd highly recommend you to check it out. If you do like our analysis and our work, I'd highly recommend you to contact us. And if you'd like more help, we can help you. You just have to come forward through on our socials. So the best place to contact us is through Instagram, which is @KMTRADERS. And we will be posting more helpful content now, as we're just trying to reach out to more different types of people, and again work with more different people as well. So hopefully we are helping you guys trade better, and I obviously appreciate any feedback or any questions that you do have. Of course, we're here to help boost the retail traders and build that consistency that you're looking for, guys. So again, if you did manage to make it all the way towards the end of this video, I massively appreciate it. I really do respect your time for taking to watch this video, but I really do hope that we did help you. And again, we will be doing the same sort of concept again in the next week video. So make sure you're subscribed to the YouTube channel, of course, for all future analysis videos, and again for this market update. And I really do hope that you again learn something from this video. So just going to wrap it up now, guys. So quickly, make sure you're subscribed. Make sure you drop a like, drop a comment, share this with anyone. Make sure you join that group as well, that trading group. That link is in the description. Follow us on Instagram and all of that social stuff, really. So again, hopefully you have a very good trading week. Follow us again for anything else, and obviously ask us any questions that you'd like to ask us. So that will be all from us on this video. Thank you very much for listening, and we'll see you in the next one, guys.